Hi, I'm Sai Tharun, and today's topic is public sector banking crisis in India. India's bad debt problem is concentrated in private sector banks. Around 70% of the total lendings in India is of the contribution from the public sector. The impaired loans are primarily to the corporate sector rather than households, with defaults arising from factors such as overcapacity, falling commodity prices, and troubled infrastructure projects. The RBI is trying to bring problems into open, having conducted an asset quality review and enhancing the reporting of restructured assets. It has also asked banks to initiate forced bankruptcy proceeding against 12 large default that between them account for 25% of the banking system's non-performing loans. Another 26 defaulters are scheduled to be forced into bankruptcy in December if their restructuring have not been resolved by them. The high level of non-performing loans is eroding the ability of public sector banks to retain earnings and thereby damaging their capital positions. Under Base 3, banks must be capital ratios of at least 11.5% by March 2019 standard. The public bank will need to raise between 19 billion and 21 billion. If the government wishes to provide some reassurance to the sector and its customers, it should consider guaranteeing bank assets along the lines of the asset protection scheme that the UK government used to stabilize the Royal Bank of Scotland. During the global market crisis, the scheme was ultimately cash flow positive for the government because paid a premium for the guarantee and never claimed on it. Once stabilized, India's banking sector needs to reformed to make sure that it contributes more effectively to economic development and at least cost to taxpayers. The best way to achieve this would be to drastically reduce the market share of state owned banks. In many countries, over many decades actually, state owned banks have shown a tendency towards poor risk management and misdirect lending. Sometimes the problem is that lending decisions are guided by a political agenda rather than commercial logic. But even in the absence of this distortion, state owned banks have less reason than private banks to prudent lenders.